Hello and welcome to the day ahead. It is Friday, the 20th of January. I'm Nadine Blaney. Well, a down day on Wall Street, though markets did end off their lows as data pointed to a slowing economy and as earnings growth remained negative. Both the S&P 500 and the Dow fell for a third straight session. That's their longest streak of declines in a month. The declines were led by financials. Real estate was up modestly, along with healthcare. Netflix shares surged in after-hours trade as quarterly subscriber growth beat expectations. The company reported earnings of 12 cents per share against 45 cents last period. Revenue increased from $7.7 billion to $7.85 billion, in line with expectations. Longtime CEO and co-founder Reed Hastings will step down as CEO. He will transition to executive chair. Also on the earnings front, Procter & Gamble declined after warning of commodity costs pressuring profits, and that's despite lifting its full-year sales forecast. In other news, brokerages cut their price target on Microsoft ahead of its second quarter results next week. Apple slipped as JP Morgan cut its price target ahead of its first quarter results. And Charles Schwab plunged shares yet again after Bank of America double downgraded it to underperform in the wake of its results the previous session. Let's get across the data though, and U.S. housing starts and building permits fell in December 2022. Interesting to note that residential investment likely contracted for the seventh consecutive quarter, which would be the longest stretch since the collapse of the housing bubble triggered the Great Recession. Lots of people pointing to that housing recession. Now, the Philadelphia Fed Business Outlook survey improved more than expected, though it does remain very weak, with the labor component, interestingly, continuing to show strength. And on jobs, weekly initial jobless claims unexpectedly fell to the lowest level since September of 2022, pointing to a still tight labor market. FOMC Vice Chair Lael Brainard and Boston President Susan Collins backed further interest rate increases. Lael Brainard saying that now we're in an environment where we are balancing risks on both sides. Her comments come ahead of the official blackout period, which starts Saturday. That restricts Fed policymakers from making further comments ahead of the next meeting at the beginning of February. To the U.S. debt ceiling, and the government hit its $31.4 trillion borrowing limit overnight, with a standoff between the Republican-controlled House of Reps and the Democrats potentially leading to a financial fiscal crisis. The United States Secretary of the Treasury Janet Yellen warned that the June date is subject to considerable uncertainty, saying in a letter to Congress that she urges it to act promptly to protect the full faith and credit of the United States. When trade gets underway here today, we will be watching the energy sector. We've had optimism on China's reopening, pushing oil higher. We should see commodity markets remaining pretty well supported. We saw iron ore futures rising for a third day. Gold also gained as the mixed economic data sparked some safe haven buying. You can see there a pretty flat open for the S&P ASX 200 as expected by the SPY futures. Bitcoin did reclaim some ground overnight. It's up over 1%. On the data front today, the People's Bank of China announces loan prime rates. We also get CPI, inflation in Japan. So interesting because of all the debate around monetary policy in Japan right now. Tonight in Europe, we will get consumer confidence. And of course, we're looking forward to some meaty reports coming in the US next week. Microsoft, Johnson & Johnson, Lockheed Martin, General Electric, and Tesla. That does it for the day ahead today. I'm Nadine Blaney. We'll see you next week.